Let's discuss first off the performance in Hong Kong. As Heidi pointed out, we saw a drop of about 3.9% for your earnings here in the city due to the change in that guaranteed rate regime. What sort of impact are you anticipating for 2019, given that it will have more of a full year impact for this year?
Well, Hong Kong is the strongest and the largest part of our portfolio. It is our home, our core market. We had a one-off reset of our permitted return, which occurred on the 1st of October last year. Now, that gives us 15 years now under a new scheme of control agreement where we have a substantial increase in investment. That's needed to help Hong Kong decarbonise. So we'll be building new gas-fired generation. We'll also be needing to import LNG, so we'll need to construct an offshore LNG terminal. So the level of capital expenditure in our business will be increasing significantly over historic levels.
Now, Richard,
so we will see continued growth in our Hong Kong market from here on in.
On that floating LNG project, previously construction was to start in 2019 with commercial operations slated for 2020. Are those timelines still viable?
Well, the gas-fired generation is due for commercial operation in 2020. The offshore LNG project will be commencing construction around the end of this year. So all of those are on target.
Can you give us a sense of the total investment so far and the take on the current status of the LNG market?
Well, the total investment for those two projects is around 11 billion Hong Kong dollars. So these are sizable projects. And they will make a steady contribution to our earnings as we go through the construction of those.
Now, turning to China, the majority of your investment there on the mainland is in clean energy, renewable business, especially when it comes to nuclear power. Now, we've seen players like CGN and CNNC building up their footprints there, a lot of nuclear reactors in Fujian, Guangdong, Guangxi, for example. Are you looking to add to any stock in those projects?
We have invested in the Yangjiang project along with CGN. So that transaction flowed through into our earnings in 2018, which it's a 17% investment in a 6,000 megawatt nuclear project. It did make a sizable addition to our China portfolio. And essentially, when you look at our business in China, a large portion is our nuclear investment. We've then got our renewable portfolio. So our business is largely decarbonised in China now.
Now, compared to the 2G, 1G reactors, are you seeing more opportunity in the 3G space? Are investments in such projects perhaps more expensive, though, than the older models?
We look at proven technology where costs are known and predictable. So with the two plants we have in our portfolio, Daya Bay and Yangjiang, those are low-cost, competitive plants. And we keep an eye on the new developments in technology, but we want to have a better understanding of the cost before we would make a step into that.
Now, given the focus on new energy, when it comes to hydro, solar, and wind, which one is enjoying a higher priority when it comes to your investment outlook?
We think they're all good technologies. We like to see a balance and we like to see a portfolio, and that really is the strength of our business. We have a diversified portfolio across different technologies and across different markets. But we don't have any favourites when it comes to technology. It's making sure that we have a good, solid balance.
And what's the prospect of getting out of the coal-fired business overall?
Well, that is our plan. And we will see coal plants gradually retiring. In Hong Kong, for example, we'll be retiring one of our plants at Castle Peak as soon as we've built the replacement capacity for it. So with coal, it does form an important part of an electricity system at the moment. You've got to build the replacement before you can close down a coal-fired plant. So that requires careful planning.
Now, with the Greater Bay development project announced by the Chinese government, what investment opportunities are you seeing there?
Interestingly, we have been part of the Greater Bay from an electricity perspective since the 1970s. Our electricity systems have been interconnected. We operate jointly with China Southern Grid to make sure that the system as a whole is reliable. So we see this as a natural extension of our business.
Now, Richard, turning to Australia, CLP has seen a lack of policy clarity being a bugbear. Has that improved in 2019 or 2018, especially with the election coming up?
Sadly, no. We would like to see more clarity around the need to transition from a carbon or a fossil fuel-based electricity system towards one that's based more on renewables. Now that requires careful planning, it requires careful coordination. It can't be done in a haphazard way, and that's why energy policy is so critical to see that transition done in a sensible way. If it's not done sensibly, then you will see blackouts, you'll see shocks in prices, and that's exactly what we are seeing in Australia.